So today seemed like a day of consolidation in the markets. We saw a dip down, prices going back up, and overall staying pretty stable. That's pretty good to see after the news that we got after the Fed released their notes, and we're seeing some stability. So really good to see overall. We're seeing things basing out. Let's take a look at how my positions did today. So Green Day overall, I'm up $24. Net liquidation is $11,587. AI is up 46 cents. I'm up $9 on the day. Sofi, I've got two positions on that. It is in the money, but really close to the money. It's pretty much at the money. $7 put. It's closed at $6.97. I am up $8 on the day. T-Flow, I should be getting that dividend tomorrow, so I'll be keeping an eye on that. Should be getting a deposit tomorrow for that dividend. Looking forward to that. Tesla settled at $180, pretty well flat. Again, looking like a consolidating type of day, and that's good to see after the news that came out yesterday from the Fed. Everything looks pretty stable right now. So again, with AI, we're seeing it base out here. Volume is lightening up here. It does look like it has some resistance at this downward trending line. And so really just basing out, that's what we want to see. I've got my $21 call, $26 credit. Everything is going pretty smooth right now with this plan on the wheel strategy. So I've got my put that I'm selling here. I'm waiting for it to expire. We have 8 days till expiration. That's next Friday. I plan to buy this position back for around 1 or 2 cents and then move on to another stock or find a new position in AI in another expiration date. So we can see here, it's working very well. I want the price to just stay pretty stable. It can go up if it wants to. It can even go down a little bit, but I'm looking for stability. And right now it's doing just that. We're seeing a base here after a very long decline here. It looks like we're bottoming at around $20.50 or so, and we're looking at a bounce up here. So in this bounce up, this consolidating time, I'm able to collect some premium here with AI. The earnings comes out at the end of May, so we have time before that comes out. It's a really good time to roll positions in, open up positions before earnings comes out because it tends to be pretty stable before the earnings comes out. So that's what we're seeing right now with AI at least. So I've got two contracts at $7 here that I'm selling, two puts here expiring next Friday. I've got two, it's 25-cent credit, so it's a $50 credit there for me on Sofi. These are shares that I really want to own. I'm really not worried about it being in the money. I want to own at least 100 shares of Sofi. But hey, if the price stays above $7, that is just fine. I'm not worried about that at all. So if I want to, and it's in the money, I'll go ahead and let it get assigned, sell calls on one of them, and own the shares of 100 shares here of Sofi, just to hold on for long-term investing there with Sofi, because this is a stock that I believe has a lot of potential. It's trading at a very low price point, and it's a growing company overall. So looking forward to seeing what Sofi has in store in the years ahead, and I want to be on that train. So I've got 20 shares in Tesla. I don't have any puts on that right now. I'm a long-term shareholder of Tesla. That's my game plan. I opened these positions a couple weeks ago, and I'm at $170.53. We had a big gap up here. It's settling down. It did something really interesting here today. It went all the way down to around $176. It nearly touched the ADMA and the 50-day moving average, and it came back up. We're seeing buying pressure around this area, which is good to see. We're seeing a change in direction in the ADMA, the 21 EMA. We're about to cross the 50-day moving average. The 50-day moving average here is looking like it's about to change direction here, and we could be potentially pushing back up to the 200 moving average here. So it's good to see. We're holding these levels. We're seeing the normal pullback that we could expect to see here after such a large move up in such a short amount of time. And then we're seeing that stability, right? That consolidation period, the pullback period here, and not just on Tesla, but in the market overall. So we can see here on SPYs, on SPY here, that we are seeing some basing action going on here. And I don't think the market really knows what it wants to do. It's really just consolidating here for now. Volume overall is pretty light. So we're settling down here. So that's overall in the market. That's in the stocks that I've got that I'm involved in right now. That's what we're seeing. and I am okay with that. I'm selling puts. My goal is to keep those puts out of the money, collect the credit, and then move on to another stock, look for another opportunity. So far, that's working really well right now. And so just to give you some perspective, you might be looking at this, let's look at my AI position, for example. I am up $17. You might look at that and you're like, man, that's not that much money, right? That's only 17 bucks. But you have to understand that I'm not really using a ton of capital here. I am using roughly $2,100, right? It's only costing me $300 in capital requirement, but overall it's $2,100 of cash to cover this position. And so with making $17 in a matter of 3 days, what return is that over a year's time? Just doing some rough math here, I made $17 in roughly 3 days. So that's $5.66 per day. We'll say that there's 250 trading days. That's roughly $1,400 in a year's time. Well, with only using $2,100, that's 67% return right there. But okay, let's just say that this strategy only works 80% of the time, right? So let's say $1,400 and divide that 1120 because it only works 80% of the time, we'll say. That's 53%, right? Let's just say that it's only right 70% of the time, 60% of the time. That's still a decent return, right? And it's just a rough estimate, but overall we're seeing that that's a pretty good return. We shouldn't be discounting, a $17 return in 3 days when I'm only using $2,100 in capital. And so really good to see. I want to see more of that. That's a good opportunity. And it probably won't actually be that much overall because more time will go by and I won't be making as much as I'm seeing here. My overall trade price is $26. So we're over halfway there already. I still have another week to go before the time is out. So I think that'll eventually, be more realistic. But really though, 30% in a year return, that's really good to see on this. So that's my goal, looking for stocks that aren't doing anything crazy, that are settling down, they have a decent premium. That's what I'm going after here. I'm trying to avoid the volatility, nice and smooth stocks, collecting credit over time, and making a decent return. Am I going for home runs? No. Is it a good strategy with good potential? Sure. But that's what I'm going for, is long, steady gains, and they're not huge. They're steady, long-term plays. I'm not trying to swing for the fences here. So I'm a new options trader. I'm doing the wheel strategy where I'm selling puts, letting them get assigned or rolling them out, and then ultimately owning the shares and selling calls against it, chasing premium all along the way and until I get my calls assigned. So that's the game plan. That's the wheel strategy in a nutshell. If you want to follow me on this journey, then hit the subscribe button. If this video was a help to you, hit the like button, and we will see you on the next video.